Clap in.
Action.
Action. Hello, my name is Philip Kaake. I'm with Compass Real Estate here in the East Bay, and I am joined by Garrick Werdmuller. Garrick is a mortgage broker with Fresh Home Loans here in Alameda, and we have done quite a lot of transactions together. He's gotten me out of some jams. So, Garrick, we are kind of getting towards the end of our shelter in place here in the COVID-19 pandemic times. And so I'm just kind of curious, has there been any significant changes that have come along in terms of getting a loan for a home during this time?
So first and foremost, thank you for having me on the show, Philip. And yeah, there has been, that's a little bit of an understatement, of course, to say there's been as many changes, I think, in home lending as there has been for most industries out there, except we are open and essential. I'd say just real fast, towards the middle to the end of March 2020, we saw the end of jumbo loans. We saw the end of non-QM loans, which are bank statement loans. There's a little bit of these coming back to the market, but we're seeing higher interest rates, bigger down payments are being required. And that's on the non-QM, which, just so you know, these are more of an alternative, not subprime, but they've been alternative loans that have existed for the last, since the crash, basically. And they've been a really good source for people who are self-employed, a lot of, restaurant owners, things like that. So obviously, because of forbearance and the fears people aren't going to be making their mortgage payments, a lot of these are privatized money, not government-sponsored entities like conforming loans are. And so they just backed out completely, like in one day, basically. And then slowly the jumbo financing, which are the larger loans out there that we need here in the Bay Area, have pretty much left the market as well. And we do see, again, little signs of them coming back. I don't think it's going to happen until the dust is settled on everything we're going through right now.
What would you say is maybe one of the biggest things you've seen as a change? Has it been harder to get a loan, for instance, just out of curiosity?
Yes. Verifications of employment as we're closing the loan. It's basically a brand new process. And I've had verifications of employment go out on clients 4 times before their loan docs went out on one of them, which, takes about a week, because basically if a certain period of time elapses and your docs haven't gone out, then they are verifying the employment again. And a lot of these people, like if you're working in the medical field right now, it's very hard to get a verification of employment, just because,
right.
Yeah.
So something that has come up with discussions with our managers is removing the loan contingency, which is always a big deal as you get closer to the end of the transaction. And many of them have said, that we should keep our loan contingency up until, closing, literally closing. Any opinions on that or thoughts?
I think the loan contingency is always a good idea. Where we work in the East Bay area, it's been very competitive lately. And so we always, we've got to do 10, 15-day close, no loan appraisal, et cetera. In this market, I don't think it's right to have, if people are out there and putting an offer on a home and they get laid off, I think, we shouldn't be going after them for a security deposit. So I think it's probably, and also, if one day the loan is just gone, I literally had someone that was going to docs and the loan died.
Do you foresee anything changing within the lending?
I'd say the biggest issues we're going to have moving forward, that I actually am having conversations with today, over the weekend, et cetera, is our loan amounts for the Bay Area, and even with you, have capped at $765,000, $600,000, which is the high balance. And so if people are, wanting to write an offer, if you want to refinance a $1.2 million loan, which is not that uncommon where we live, I had a call and I just couldn't do it. And he couldn't find anyone else that could do it. So that's going to be the biggest hurdle. If your house is worth 1.8 and you can't get a loan, and the person who wants to buy it can only get a loan for $765,000, that is a serious issue if they do not have $1 million,
Right.
as we both know.
Yeah, we have higher priced properties here in the Bay Area. So I think we talked about this, where you said there are high cost areas. And so loan amounts are different, but still in the Bay Area, even those higher balance loans probably don't bridge the gap from what somebody has in savings versus a purchase price on, like you said, like a anywhere from a 1.2 to $2 million property. So,
Right. And a lot of the programs that did go away, we had programs where you could put 5% down up to 2 million. That creates a huge opportunity for, younger, techier people in the Bay Area that, may not have a big down payment, but they have a good job. And so, yeah, that things like that will definitely affect the luxury markets. I think going to get hit just because there's little financing.
just any other thoughts on what's going on?
Yeah,
From
one
you?
thing is we discussed the PED last week in homes opening up. The PED is the
Property Entry Advisory Declaration.
thank you. So it sounds to me like you need one of those signed in your hand to see a property, but you also need a pre-approval letter because people are not wanting a potential buyer entering their home if they're not qualified for a loan. And so what I've seen is that normally I'd write a pre-approval letter as we're writing an offer. But now when someone wants to get pre-approved, I'm sending out the letter right away so that they have it so they can go and you can show them homes basically by
Right.
appointment only, of course.
Right.
But that's very important is to get pre-approved and have that letter in hand right now.
Right. And that's an excellent point. It's something that I talk to buyers about all the time about, when they want to get serious, really, they need to go talk to a lender, get the pre-approval so that they're ready to go. But that's an excellent point in that the restrictions right now on showing property, people want to know that those buyers are vetted. So thank you for reminding me of that. Hey, listen, thanks for popping in on the show. Not really a show, but my channel and
I
sharing
think it's
your
a show
insights.
and a channel.
What's that?
I said it's a show and a channel.
It's a show and a channel. That's right. Sheltering in place here in the East Bay. Garrick Werdmuller, thank you very much for joining me and sharing your insights into the market and lending and all that other stuff. And I'm sure we'll be chatting again soon. Thanks
Sounds
again.
good. Be safe, everybody.